Time for our 360 round, looking at defense stocks, which are largely under pressure today. I want to bring in our panel, Danielle Shay, Vice President of Options at Simpler Trading, and David Dietze, Chief Investment Strategist, Dietze Wealth Management Group. Danielle, I want to go to you first, especially because the reaction, we are seeing a sharp reaction in the market. Lockheed Martin, the only one positive among the group that we're looking at today. We're looking at RTX, the artist formerly known as Raytheon, and Northrop, both under heavy pressure. You say in terms of this general reaction, it seems to be too much, essentially an overreaction. Why do you say that?
So when you're looking at this reaction, first of all, you want to look at what happened before this earnings report hit. We have a really strong trend in this stock. The EPS estimates were very strong. They beat. A dividend is still currently strong. And when you look at the long-term trend, this stock is still holding that long-term trend. So whenever I see a strong fundamental and technical name that falls on earnings to this extent, specifically into a critical support zone like we're at right now with Raytheon, for me, that's a longer-term buying opportunity.
Okay, David, I want to get your overall views on the sector because, look, they basically indicated some tariff risk as well, in particular for Raytheon. They said they're, getting ready for an $850 million tariff hit from Canada, Mexico, duties on trade with China. David, what's your views on the sector?
Yeah, so basically we're upbeat on the sector. I mean, we live in a dangerous world here. We've got two wars that we can't seem to put back into the bottle. A third war could ultimately ensue between China and Taiwan. You've got a continent in the form of Europe who's now realizing they've got to be more in charge of their defense than they were in the past. And so they're upping their budgets to spend more on defense. So I think that's your overriding bullish factor. Obviously, recession's on everyone's mind, but historically, defense spending is a little less cyclical because it depends on the government maintaining the peace and not on consumers feeling good about the economy. So I think that's going to be helpful too. You've got a Republican administration, you've got a Republican-controlled Congress. Historically, those groups have been more pro-defense than other groups. Finally, we've got Trump looking at relaxing military export rules. So I think all those factors provide a tailwind for this group.
Danielle, I want to ask you your thoughts, kind of to elaborate on where David is going here, but with the, I guess, the risk factor of, I don't want to call it political risk, but we know that U.S. government running massive deficits. Defense programs are under scrutiny as well for potential cuts, especially you've got DOGE looking for cuts everywhere where they can make cuts. Do you think there's some risk factor that is, that it's real when it comes to these companies?
Oh, absolutely. And I think that that's probably the major reason why this stock is down today. And I think that that's what we're going to see throughout this earnings season. Right now, with the market sitting where it's at, anytime investors hear, spending cuts, any type of issue surrounding tariffs, we're going to see strong stocks like this get hit by jitters, especially when people want to take profits because Raytheon has been a really strong stock. So yes, I do think that it's a real risk, but at the end of the day, you need to look at the EPS estimates and how they're actually performing. And when we have these kind of geopolitical issues and tensions in the short term, it's going to cause volatility, but you have to look at your key levels of support. You have to look at the way earnings are actually coming in and think about your long-term plan. And I completely agree with David as well, because the long-term plan here is that defense spending is going to continue to increase because of all these potential geopolitical tensions.
Okay, that's a great point. So, David, I'm interested to know your favorite in this group, and especially when you take in the perspective of what Danielle mentioned, the long-term planning is a big factor. Cost overruns are often part of the game when it comes to this group because it's not, it's not about adjusting for the economy. It's what are the defense needs of the time and the current day and age. So, how should investors interpret all of this, and what's your favorite in the group?
Yeah, so I do think that the most important thing is whether you're in the group or not. And the stocks, as a general proposition, trade at a below market multiple, but I think there is less risk for all the reasons we've already discussed. Having said that, my favorite might be Lockheed Martin. Why? Because they're the biggest producer of the F-35s. at $100 million a pop. These are the most versatile planes, manned drones, as it were, that can be launched from any continent to reach another continent. Every country wants more of those in their armament. Lockheed Martin has 25% of that market, so that's where my money is. I do think another thing holding back these stocks today were that none of them raised their outlook, and I think Danielle mentioned that there are political risks out there. You've got arguably the closest advisor to the president, Elon Musk, with his own little SpaceX defense aerospace company, which has a bigger market cap than any of these other traditional defense companies, who just tweeted on Sunday, why are we making so many F-35s when we have drones around? So there is that political risk. The question is, will Mr. Musk be where he is 1 year from now? But I still think our defense needs will be ever stronger 1 year from now.
All right, we're going to have to end our conversation there. Shares of Lockheed Martin currently higher, outperforming the broader group. That's David Dietze and Danielle Shay. Thank you both for your insight.